Welcome to Get Your Life. It is February 9th, 2015. I have a couple trades that I want to go over today. We have a pound Australia trade, and there is a euro New Zealand trade. One I had to take a small loss on because once we got in the trade, the market did not follow through. In fact, the markets got really choppy once we entered the trade. And the other trade was a partial win, partial break even, and let me go over these. The first one we have here is the pound Australia 5-minute chart. There were a couple reasons why I got into this trade. First of all, I want to draw your attention to this area right here where my cursor's at. This is a very extended period of consolidation. And because the market's consolidated there, when the market comes back up to retest that area, you're probably going to have a little bit of trouble breaking through. So at minimum, you should be able to get some kind of pullback towards the bottom. So I saw that area right there. It may become a little clearer on the 15-minute chart. It's this entire area right here. So I saw that area. I saw price coming up into that area. And if you're looking for an entry signal, like I always say, you want to wait till the candle's red, the DSS is red, and the THV is red. And always make sure that you have the 15-minute lining up with the 5-minute. So if you go to the 15-minute chart, where the entry took place, which is this red line, if you look at the DSS, it was overbought. So when you have a 5-minute that looks like it's going to roll over and a 15-minute that's overbought, you could be getting a pretty good signal here on your charts. So that's why I was interested in the trade. Not only that, but look at your THV. There was a divergence on the THV. Take a look. You have price moving higher here and THV turning red and moving lower. In fact, when you got your signal candle, THV was a red and crossed down. So that was a great divergent signal right there. So let me remove this right here. The close of that candle, which is where you get your signal at, was $1.9480. So $1.9480 was your entry. And then I placed the stop 2 bars above, which is just above the recent high. And so your first target will be at least 2 bars below 1, 2, which was actually right there. Let me get rid of that bottom line. So that was your first target. So you should have taken off at least half of the trade at that level. The one thing that I want to mention here, though, is you had one hit of this level, a pullback, a second hit, a pullback, a third hit. We were looking at a third hit, and the more times that the market hits a certain area, the higher the likelihood it's going to break through. Like, take a look here. 1, 2, 3, fourth time it collapsed over in this area. 1, 2, 3, 4, there it went. So I actually expected this bottom to break and price to continue to move, so I did not take off all of my position here. So yeah, but that's pretty much the trade that I took this morning on the pound odd. Once I did get down to this bottom level here, though, I did put a break-even stop in on that. So had you not got out at the first green dot up here, you would have definitely got stopped out over here for break-even. But at any rate, I do recommend taking a portion of your trade off at the first level, the first target, which is a 1-to-1. That way you're getting paid at least something if you do have a reversal in the market, which we did. But keep in mind, it is Monday, and Mondays tend to be a little choppier, a little less follow through. So a little disappointing trade. I was hoping it'd break down and we'd have about a 70 pip move, but at any rate, you should have got 30 pips on the first half of that and break even on the second, or 30 pips on the entire position had you taken it all off. So the other trade that I got into was the Euro New Zealand. Now this one did not work out quite as well. The reason why I was looking at getting into this trade is you have this consolidation period over here several bars, about, let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, about an hour of consolidation. So when price comes up into that general area, you should see a move down. And so I was watching that area, and then you have the bottoms here. The thing about it is sometimes the bottom can be resistance, or sometimes the top, because your sellers are right up here and they cause this big move down. Sometimes it'll make it to the bottom, sometimes it'll make it to the top. So either one of those could be looked at as resistance. But it did hit the bottom part of that, and also the moving average was in that area. So that's why I took the trade. So when this confirmed, it would be the second red one, because you hadn't had it there yet. It would be that candle right there. Let me draw a line on there so you can see this. So you have a major downtrend, you have price coming back into the moving average, and then you have a major area of resistance right here. And if also you want to look at this, you have a pretty good area of divergence. See that? You have a higher slope up, but if you look in your charts, that swing high to that swing high is much lower. So in most cases that will lead to a pretty dramatic sell-off, but for some reason today it did not. But that's why you use stop losses. But anyways, my entry, let me get rid of these white lines here. My entry on this trade would have been that candle right there. So I got in at about that's 52.39. I got in around, I think, 52.37 or somewhere in there. So let's put a line right there. That's about where I got in. So my stop loss was actually about right there, which would have been 2 bars up above the last swing high right here. Unfortunately, it did not continue to head down in my direction. So I got out at that green candle right, or that green DSS dot right there. It would have been right, well, let's see if we can do this correctly here. It would have been that candle right there. So at the close of that candle, I actually got out, which would have been $1.5255. So about a 17 pip loss on that trade. Again, your risk was all the way up to about 63. So it was about a 25 to 30 pip stop loss with your spread. So I got out at negative 17. So I saved a little bit of money on that one, because as you can see, if you would have waited for the stop out instead of watching your dots turn green, you would have had a full stop. So, but a lot of times, like I've said before, if you have price moving into the moving average and it just goes sideways like that, a lot of times it's getting ready to reverse. The market is. So unfortunately that one didn't work out. But because there's only 17 pip loss, it won't be too difficult to make it back on the next trade. But anyway, so for the day, down a little bit. Not a very pleasant day, but again, it is Monday, and things are a little bit choppy. The reason why I did get into this, though, is because the market looked like it had a bit of structure, because you see all these red candles down, all these green candles up. So generally speaking, when you get your first red candle, it should continue to move down. Now, normally you will get at least a retest of the bottom before move up, but it doesn't look like that happened. So this is kind of like a V-shaped recovery so far, but again, it is 12 noon Eastern Standard Time, so the markets will probably dry up and pretty much go nowhere for the rest of the day. So anyway, those are the 2 trades that I have that I got into today. If you have any questions at all about them, just let me know. All right, thank you for watching. Have a good day.